Okay, folks, get yourself settled. I'll be with you in a few ticks. Chandro Bosman, I'm new. Hi, well, you're in the right place. Okay, guys, I'll be with you very soon. Just getting set up.
Spot 8 for the headline, 63 for business activity, 51 spot 8 for employment, 61 spot 5 for new orders, and 59 for prices paid. Still awaiting the employment trend. So the headline ISM coming in at 57.8.
Quite strong numbers there. Quite strong numbers coming out.
Business activity beats as well, 63 versus 61 expected.
So some strong numbers coming out of the US at the moment. Right, good afternoon, folks. Good afternoon. Hopefully you are well. It's that time of the day again. It is Mondays, 3 p.m. London time. It's your chance to come on to the live stream and join in the fun. Hello to all of you there from different parts of the world. We've got India. We've got Sadiq there from Nigeria. We've got Slayer Fidel from Botswana. We've got someone from the UK is here as well. There we go. We've got Swaziland, Thailand, Morocco. We've got good to see you. We've got Danny Alvaro from Costa Rica, from Oklahoma. Gosh, we are getting all over the world. The power of YouTube. And George Banda from South Africa, Pakistan. We've got Amjad Ali from Pakistan and Malaysia as well, Indonesia. So you can tell it's live. It certainly is live. We've got all these people coming. So it's your chance to interact with me. I know a lot of you follow me on the YouTube channel throughout the month, but this is a chance for you to sort of ask me questions in real time, in live environment. Anything you want me to answer, discuss, I'm happy to do that as well. Of course, there's lots of people in the room all scrolling questions. I'll try and keep a track of them, but really when I get to the end I'll say any questions, something like that. Maybe it's then is a better time to ask me anything. Otherwise, while I'm sort of going through the stream here, it's going to be a little bit difficult for me to keep on track of everything, and of course I don't want to be seen to be ignoring you. We do have admin team in the way here. There she is. Someone's popping in some links there. We stream live around the clock here at Forex Signals, and myself and 3 other mentors. Just introduced a new guy as well. His name is Paul. He's an old veteran trader like myself. He traded the option markets while I was trading the futures markets on the same trading floor. So we're streaming live around the clock, basically doing this type of thing. If you want to join in the fun, you can of course come over to Forex Signals anytime. It doesn't cost you a dime to see what we do, and you can have access also some of the tools you can see there, and in particular this one here that I'm going to talk about in a moment. So what I'm going to do now, it's about 40 minutes. I'm just going to go through a little bit about what's been driving the markets fundamentally over the last week, basically Trump. And then we'll have a quick look at the chart, see what's going on, a couple of trade ideas. I want to introduce you to I try to put a bit of education in here once a week. not too long, maybe about 5 minutes or so. For some of you that maybe are completely new to Forex, you might learn something. For those of you that are experienced, well, you can just mute me, I guess. So today I'm going to talk about a technical indicator that I'm not a big user of technical indicators. Anyone that knows me knows that now over the years. But there's one indicator that I do use. It's called the average true range, the ATR. I just want to introduce you to that, show you basically what it is, how it works, what it can mean, and I'll touch on how I use it as well. If you're struggling with your profit targets and stop loss levels, using an ATR is a very, very simple way to get things right back down to basics. So I think it's a great indicator amongst the others. I'll introduce you to that as well, and then we'll get on to the charts at the end of the session, and we'll get on to the scalp charts, the 5 minute, 15, and we'll see if we can make a few pips trading out scalping strategy, the one that I'm sure you've all seen me talk about in the past on this live event. Bob Bean Mambug from the Philippines. Kamusta ka in the Philippines? There you are. That's a bit of Tagalog for you. And Uganda as well. Kuwait. Andrew Grant is in Kuwait. There you go. Right, there you go. Right, okay, so what's been driving the markets this week? I'll tell you what I'm going to do. I'm going to move myself down to that little corner over there, and I am going to pull up just basically a little bit of a clue of what's basically been driving the markets over the last week. So, yeah, I mean, it's all been about Trump. Trump, you know, we always look at these technical indicators throughout the week, not indicators, sorry, economic releases throughout the week, and obviously they're normally very, very important. But basically, Trump's been trumping everything last week. And as we know, Trump was admitted to hospital. And of course, you get all the conspiracy theories. Trump is not well. Clearly, he's not well. But of course, the markets were reacting to that, to the downside. The stock markets, the risk-off markets, uncertainty. Markets, I know it's a bit cliche. I'm sure you've seen it before, heard it before. Markets don't like uncertainty, and that's basically what happened towards the end of last week. The stock markets fell off, almost 2 or 3% when Trump got admitted, and of course we're not getting the full picture about the current state of him at the moment. But the stock markets are showing today again signs of bid. There's money moving into the risk assets like the stock market, and that does have an implication of the Forex market, basically what we trade all day long. So we are keeping an eye on the Trump picture at the moment, the Trump story, to see where we can go, because it is affecting the currency markets as well. Last week we also had the twos and throws of Brexit, so the pound was just basically behaving like that. Up and down and left and right and all which way you go. Today, pound is all bid again. I don't know. I saw Prime Minister Johnson yesterday on the newswires. I don't know. I thought his demeanour wasn't looking too positive. Pound has been sold off heavily over the last few weeks, but now there is definite signs of optimism creeping into the UK and a deal with Brexit. With deal with the Europeans on Brexit, and that basically is one of the reasons why the pound at the moment is largely pretty well bid. So pound is going strong on the back of Brexit optimism. And US non-farm payroll on Friday. For those of you that joined in for that, I know some of you did. I gave away $1,500 in cold hard cash, as I do every non-farm payroll. To some winners inside our room. If you want to take part in that for next month, you can do so. Again, come over to the trading room. I think next month's pot, though, we are looking at $5,000 to give away, which I'll do on a live event. Again, you need to come over to the trading room, get registered, get involved to take part in that. But we gave away $1,500 to three lucky winners. Well, not lucky. They basically put in some work, and one was lucky because he won the random raffle. But the non-farm payroll itself was a bit of a non-event, although we did scalp it, didn't we? We made, I think we made about 15 pips on a quick scalp, which was nice. But it was, well, I tell you what about the numbers. They gave us a bit of an indication that the US economy maybe isn't coming out of this pandemic as confidently as previously thought. So there's definitely been a slowdown in the job numbers out in the US. And remember, everything really stems from the job numbers. Everything revolves around the job numbers. It is the biggest event of the calendar month. Why? Because obviously, if people have jobs, people are spending money. If people are spending money, that means prices go up. If prices go up, yields have to go up as well to stop inflation. So everything revolves around the jobs market. It's the first indication really of of economic growth in the country, and we had that last week. And the jobs numbers slowed a little bit in the US, and dollar is coming under a little bit of pressure on the follow-on from that. Dollar is also coming under pressure as well because it's a safe haven flow has been moving out of the dollar. What I mean by that is, normally in times of uncertainty, money flows into the US dollar as a safe haven asset. Now the markets are showing some bid, stocks are going up, everything's looking good. Trump's coming out. So the dollar safety haven support has been pulled, and the dollar is under pressure as well. Right. So this week, what we got this week? We got Trump, and Trump. I haven't heard anything today. I think he's still in there today. He hasn't been tweeting today, or has he? I haven't seen any tweets from him. It's all about Trump at the moment. Will he come out? When he come out? If he does come out, then obviously the campaign's back on track, and you'd expect to see the stock market again push higher. Stock market pushing higher, dollar and the yen will trade lower. It's as simple as that. So if Trump gets released, that's not the right word, is it? If Trump gets discharged today, you get released from prison and you get discharged from hospital. So if he gets discharged today, then you would expect to see the dollar come under pressure and the yen come under pressure as well. So keep an eye on that if you are trying to predict what's going on. He will not be released today, Photo Guy says. Released, discharged. I don't know. I don't think so. But there was some talk about that, and that's why obviously the stocks were going bid this morning. IC Palace in Florida. Later on in the week, we got, I think it's tomorrow, RBA policy. RBA stands for Reserve Bank of Australia. That's when they decide on interest rates. Are they moving interest rates? They won't be moving interest rates, but they will be talking about the economic outlook. Mark, who's my co-colleague here at Forex Signals, we chatted to him today on the morning meeting. It looks as though Australia might be coming out of the lockdown, the strict lockdown that they've been in for a period of time there. So maybe they're turning the corner. Maybe that will be cited in the RBA, Reserve Bank of Australia's economic outlook going forward. So we'll be looking at that. Australian dollar at the moment is under a bit of pressure. Later on in the week, we've got Lagarde. I haven't told you what I haven't got up here. We've got FOMC minutes on Wednesday. I'm not sure why I haven't got that up there. We've got FOMC, that's the Federal Open Market Committee. That's basically the US central bank giving minutes of their meeting. So we'll get more of an insight into what they're thinking. But big mover? Maybe not. I think we know what they're thinking. Powell's been out there enough times in the last few months, last few weeks talking. So we pretty much know what's going on there. Lagarde, Bailey and Powell are also speaking later on in the week. Lagarde's the European Central Bank. Bailey is the UK Central Bank Governor. And Powell, of course, is the Fed. And on Friday, we've got the Canadian unemployment numbers, so we'll be watching that. Canadian dollar at the moment, the loonie is performing pretty strongly across the basket of currencies. So we'll see if those numbers are going to support that, in which case the CAD could end up the week on a big note. CAD actually is one of the stronger currencies at the moment. The dollar is one of the weaker currencies at the moment, which is why I particularly like this trade that's coming up. We talked about it this morning in my live stream. My face is in the way, so I'm going to put that over there. So I'm basically looking at this dollar CAD. Okay, so this is the dollar against the CAD. This is the daily chart. Okay, so you can see here, this is one of our strategy styles that we trade. The trend here is clearly trading to the downside, but no market's moving a trend forever, as we know. So this market has pulled back into what can only be described as really, really strong level of previous support. It was basically the stalling point from this big move you saw from the downside. So pretty much 1,200 pips to the downside, it stalled around this level. Okay, it stalled there, went into consolidation, then came back down and was still reacting at this level. Now we've broken through this level, hit this new low, we're now back up at it. But what we've done here, we put in this bearish bit of pattern, this bit of price action here. This is like a bearish engulfing pattern here. Is in previous red candle there is engulfing the previous 3 daily candles. That shows you last week indecision. Are we going to break higher, continue higher, or are we going to respect this level of resistance and carry on trading to the downside? It has respected this level of resistance and is trading to the downside. So the path now of least resistance for the dollar against the CAD, we think is still likely to trade on back down, possibly down to test those levels there around the 130.50 level. So what I'll be telling our room to do, or talking to our room about this week, we'll be looking at potentially selling into any rallies that you see on this currency pair. As you can see on the momentum meter, so this is our momentum meter. Let me put myself over there now, all over the place. Excuse me a second. How do you get, the Joseph Aon says, how do you get this biometer? Never heard it called a biometer before. It sounds like something I get in hospital when I go for a checkup. It's a strength meter. You can get it inside the trading room. And we don't sell it. It's all free. Try it out. Come inside the room. So what's this? This is showing me at the moment. This green line and this brown line is the euro. Sorry, is the dollar, the green dollar. That's why I've called it green. That's why I've coloured it green. And the brown line is the Japanese yen. Remember, these are the safe haven currencies. As the markets goes bid, you can see I've put on the little ticker below me, the stock market. The risk is on. Stocks are going bid. When that happens, these currencies will trade lower, or should trade lower, because they are the safe haven currencies. And normally the commodity currencies, commodity currencies like the Australian dollar, the Canadian dollar, the New Zealand dollar tend to trade higher. What you're seeing here, this is interesting. A lot of data out this week. Today, in fact, we saw. So this is the euro. This blue line here is the euro. So the euro is getting stronger. Well, this tells me now, if I want to have an edge in the market, I've got to be buying the euro and I've got to be selling the yen. The euro yen to the upside is better risk reward than a 50-50 bet. And all we're trying to do in Forex, any trading, is try to get slightest edge in our favour. So using something like this for me is, they say there's no such thing as a holy grail. Well, there's no such thing as a holy grail. If there were such thing as a holy grail, I would say this is pretty damn close to it. It doesn't predict the future. Of course it doesn't. Nothing does. If it does, I wouldn't be sitting here on a Monday afternoon. It doesn't predict the future, but it does tell us exactly where the momentum money is going at the moment. And as trend followers, we like to follow where the money is going. So at the moment, the money is going into the euro, and the money is coming out of the US dollar and the Japanese yen. And he's also coming out of the Australian dollar. The CAD's been strong. CAD's just coming back in the last hour or so now. I mean, I'm looking at the CAD strong. It's still up there. It's still, was the second strongest currency a while ago. It's coming back a little bit now. As you can see, it's just coming back down on the 1 hour chart. But the dollar is still weak. The green US dollar is still weak. So still trading that to the downside. So we'll be keeping an eye on that. So the US dollar. Let's have a quick look then at the euro against the Japanese yen. I think this is gonna come back up. In fact, and I say that, I haven't looked at it since this morning's stream. We have just pushed through it already. So this level of resistance, I've had it drawn in here on the daily chart for a long time. We've broken higher now. This is a big level of resistance. Look, this is the 4 hour chart. 4 hour charts have much more power behind them than the smaller, lower time frame charts. We bounced off it there. We faded here. Now we smashed through here with the 5th successive blue bullish candle. I wouldn't be surprised to see a come back, test this level, and off we go. So I'll be looking at, just bear with me a moment. Let me just pull up the my drawing tool. Where's my drawing tool? Oh, there it is. What's it doing over there? Bizarre. Oops, daisy. So there is my drawing tool, and is it showing me? Hang on a second. Excuse me a moment. This shows you that it's live, isn't it? Shows you that it's live and that. Right. Do I want it moved? Yes, I do. Now do I want it moved? No, I don't. So we are looking at this level here. That's really annoying. That's not happening. Okay, there we go. So this level here, previous level of support, previous level of resistance, previous level of resistance. Yeah, I'm looking now for a break, a retest, and off we go again. I never like to trade these breakouts at these key levels with my money. I prefer to trade them with your money, other people's money. So let the market show me what's up here at the moment. Now, if I had been long here, if I'd have been fortunate enough to be long here, I would definitely be looking at taking profits of these levels. So I want to see what the marketplace is doing. Reading charts, you know people are long here. Yeah. People have been buying this up. That's why it got up where it is. Are they going to take profits here? And if they do, how much profits are they going to take? Is it enough to drag us right the way down? If it doesn't, and it holds around this level, then that's a good indication that we've got much more weight to the upside and a trend continuation. Simple price action. You know, I don't need all the indicators. I use the ATR. But this is the type of bit of price action I'm looking for. The breakout, the retest, and the continuation for the euro yen to the upside. We know the yen is weak across the basket of currencies. We know the risk is currently on. Yep, money is going into risk assets. And we know the euro is strong. So the edge, and that's all we want in this market, is a slight edge. The edge on this one is to the upside. So that's basically what we're looking at the moment. Just looking at those at that strength. Just having a quick look here at the chit chat. See if I haven't missed anything. Paul says he's got another bottle of Dettol. Yeah. There you are. Yeah, you can put the login password and use it. Yep. Thanks for that. Yeah, you don't need a real account. You just plug it onto. You can plug this onto any MT4 platform, that momentum meter. Right, now I just want to talk to you very briefly before we get on and see if we can make some money about the ATR. Okay, as I say, the ATR is basically the only real indicator that I use. It stands for the average true range. Do forgive me if you are an experienced trader and you know exactly all about this. Well, that's all part of it, but I'm trying to tailor it to all levels of experience. It is a great little indicator. This, it tells you everything about momentum and what's happening to a particular currency pair. With currency trading, forex trading, if you're following trends, clearly you want a momentum move in the markets, and this shows you where the momentum is going. Basically, the range. Well, what's the range? The range of a candle is basically the difference between the high of a particular trading entity in that time period, be it a 5 minute, be it a 1 hour, be it 4 hours, weekly, monthly, or whatever it is. The difference between the high and the low is basically the range. And the average true range is simply the average of the range over a predetermined number of candles. I think the default that most platforms use these days is a 14 period look back. So for example here, I put these slides together a few years ago, so I'm not quite sure how they work again. But if you look here, I put in the numbers here of the ranges of these candles. Okay, so the market's moving up, and the range there on that bigger candle here is a nice 7 pip range. And what basically the calculation does, it adds them all up. So this is over an 8 period. It adds them all up, becomes to 39. You divide it by 8. The average true range over the last 8 candles is now 4.9. Now, I'm sure all of you studied averages and means at school. A moving average, basically, same with a moving average in terms of price action. But basically, moving average has the first number in the calculation drop off, and the new number of the next most recent candle added on. So here you see I've dropped off 8, so quite a big number has been dropped off 8, and a new number 1 has been added in. So that basically means that the calculation now adds up to 32. Divide by 8, and that gives you an ATR of 4. So the average range now, average true range of this particular trading entity over the 8 period is falling back down. So what are the advantages of using the average true range? Average true range, as I say, most default calculators these days, in fact for a lot of the indicators, use a 14 period, and quite frankly I don't see any real reason why we change that. So it basically averages out the ranges over a 14 period look back. It's normally quite a good, it's not too short and not too fast. It's a measure of volatility. So if the ATR is rising, if the candles are getting bigger in their ranges, it means that volatility is increasing. And clearly, if the average true range is falling, coming back down, it basically means the volatility is falling. Now, if you're trading a trend, if you're trading a trending and you want to get in on a trend, would you rather be trading a trend with a moving average that's increasing or one that's decreasing? I think you know the answer. It's obviously one that's increasing. I've got my little face in the way there. Let me just take my candle, my picture over there. A falling or low ATR indicates a consolidation in the market, and very, very true. The other thing, I'm going to show you that in a second. The ATR is a useful tool for setting take profit targets and stop loss levels. Right. A lot of people struggle with when to take profits. I have this very, very simple rule in a lot of my trading. I like to follow trends. Okay. And one of the rules that I have in my trend following is an ATR pullback. Okay. So for example, if the markets are trending up, and here you can see we've got a market that's trending up. Okay, no markets trend in a particular direction without having pullbacks. We don't know whether that is a pullback or whether that is going to be a reversal, in which case it's just going to carry on lower. One of the things I look for is a 2 ATR pullback. Okay, so I look for 2 ATRs. I can't really write using this mouse thing, but there you go, 2 ATRs. You understand. Okay, it's not magic. There's no magic thing I found, but a 2 ATR pullback for me is a decent pullback. That doesn't indicate necessarily a reversal. Now my theory is, and you'll see this in some of my strategies, a 2 ATR pullback with a 2 ATR stop, that basically means 4 ATRs pulling back, that chances are that is a reversal. Very simple rule. Don't just trade it religiously. You've got to trade it in conjunction with other stuff as well. You know, trading it a 2 ATR pullback into previous level, like here, for example, would be, you know, a potential rule that you can tick off your checklist. A 2 ATR pullback with a 2 ATR stop and a 3 ATR profit target. You've got the risk reward in your favor. You've got 3 ATR profit target and you've got a 2 ATR stop. So you're making more money on the ones that work and you don't than the ones that lose. Yeah, you're not leaving any ambiguity to it. You're following a simple set of rules. For those that are struggling to find a set of rules, just use a 2 ATR pullback and a 2 ATR stop and a 3 ATR profit target. Use it in conjunction with other stuff as well. But it's a very simple rule that you can apply to some of your strategies. And remember, just on strategies, if you are trading without a strategy, the chances are you are not, in fact, trading. So there's a simple rule. You can add it to one of your strategies. Go and back test it. See how you get on for those of you that are struggling. Let's just, I just want to show you the effects of volatility on this. Okay, so here you'll see this is a true screenshot of a chart. I did it from a while back. So you can see here, this chances are is the aging session when everything's drying up. This is mostly a 1 hour chart. I can't remember now. Okay, but this is overnight consolidation. Markets are coming down, not doing much. Do you want to follow trends in this? Do you want to follow trends in this? Look where my mouse is at the bottom. Yeah, you've got an ATR down here. It's pretty flat. You're not going to be following trends in that. You want to see the breakout. Now this happens to be at obviously the opening. So the moment the market opens and off we go into a trend, look what happens to the ATR. This is indicating that the market's in trend. So of course it doesn't predict the future, but I want to be looking at this. I want to be trading now. I don't want to be trading when the markets are rolling back, into a low ATR again. Here you can see, I've just done the screenshots. I've spoken before. I've scrolled on through, but there you can see ATR is 3 in consolidation, and of course when the market opens, we scroll it up, and you can see the moving average true ranges has increased somewhat. So there you are. That's just a little bit of a tool. Very simple indicator. I know a lot of you like to use indicators. I don't like using indicators, but that is one that I think certainly is worth having a look at. But remember, no indicator out there predicts the future. And there is no magic. There is no magic set of indicators. Any of these educators out there that are trying to sell you a strategy for $2,500 and this is the best strategy in the world. They put in all these indicators, stochastics, MACDs, average true ranges, oscillators and all that. There's no magic. There's no magic set of rules or indicators you can put into a cauldron, mix them up and come out with a winning strategy. It doesn't exist, folks. And if you're looking for that, then you're going to be sadly disappointed. So what I would say is get some very simple rules, go and back test it and then trade that edge going forward. Sergen, you can use ATRs in all time frames. If I'm trading a 1 hour time frame chart, for example, for my trend continuation, I look at the 4 hour confirmation. Are we above or below the moving averages? Are we seeing a pullback, a 2 ATR pullback on the lower time frame, like the 1 hour, 2 ATR pullback? Is there price action? Is it support and resistance? Bang, bang, bang. 3 little ticks there. I take the trade. go away and back test it, I would say. Right, folks, let's have a quick look now at the charts. We'll see if we can make some pips. Now, for those of you that follow this stream, we do it every Monday. We're basically looking for trend continuation. I'm not a big fan of trading the 5-minute chart these days. I'm just way too busy for that. But in the olden days, and I'll be on the lower time frame charts, this is something that we use now. 280R pullback is one of the criteria. Another criteria would be a pullback looking at these price patterns that you often hear me talk about. These are the bullish engulfers and the bullish pin bars. I gave a lesson last week on those. I will do the same lesson again next week. I don't want to do it every week because it will bore my regulars here. But it basically gives us an indication of trend continuation, with the thought basically being if the market, we got 15 minutes to trade it, so we'll see if we can. So basically with the thought being if, let's have a look here. Something's going weirdly wrong with my drawing tool today. So if the market is trading up, let me make that thicker. So if the market is trading up, yeah, no markets move up in a straight line. I want to decide when I get into this trend. I'm going to wait for 280R pullback. On this strategy, I'm going to wait for this type of pattern where you see a bullish engulfing pattern. So you have the pullback red candle, and then the following candle is an engulfing candle. That indicates that this little pullback is indeed a pullback, and the trend is more likely to continue than not. A very simple price action. You can trade this on all time frames. So I'm going to look at now the 15-minute chart, and I'll stick in the 1 hour as well just for now, but we're not going to see a new 1 hour candle in this stream. I'm going to tick the engulfers, and I'm going to click activate scan, and it's going to pull up some potential trading opportunities for me. So I don't have to sit here watching them every 5 minutes on the chart. I'm way too busy for that now. I'm just going to basically, let's see what I'll do. I'll put myself down there again, and I'll move that over there. I think I might just make it a little bit smaller. Can I make it smaller? Could do if I get my finger on the mouse. There we go. I can't make it smaller. There you go. So what I do now, I've got all the potential signals set up. Here I have got. I just want to scroll down and see if there's an hourly one first, which would have happened 30 minutes ago. Let's just have a look at this pound New Zealand hourly. Okay, so we've got a bearish candle at the top of this trend. So no, this is not a trade. However, this is a potential reversal, not for this strategy today, folks. But when you see that type of pattern, when you got that bearish pin at the level of resistance, that again is a strong signal that this market does indeed want to reverse. We trade this strategy on a higher time frame. On the daily chart, it's part of our strategies that I teach inside the room. It's called the naked day trading strategy, and we look for that, or say on the higher time frame charts. But that is not a signal, and we'll talk about that strategy another time perhaps. So let me just take that one off. All right, let's have a look here, see what's going on. Aussie yen pin bar. I hope this is a positive pin bar. It's not. It's a negative pin bar, only because I thought, well, I know the trend is up in this currency pair because I've been trading it earlier and I was making some nice money on it. But no, this is a bearish pin, and the trend is clearly up. So that is not a signal. So we'll take that one off as well. Now, every 5 minutes, we're going to get a new pin bar or pattern shown. All I have to do is literally spend 10 seconds. That's a shame, isn't it? That's a really nice trending up market, the euro yen. We talked about that a moment ago. Yep. I mean, just look here on the 5 minute chart. This is on hindsight, okay? But look how many opportunities we've had to take this trade to the long side. Well, there's one there. Remember, we're not taking short trades. So I don't think, some of them work, some of them, we're not going to take these. That's a bearish pattern. We're not taking those. We're not that's a bearish engulfer. We're not taking them. We're only taking the long ones. You'd have taken that one there. You'd have maybe taken that one there. You'd have possibly taken that one there. To be honest, there's not been a great deal of opportunities in that, but that's okay. But the euro yen, we just got a bearish little pattern coming in there. We're not taking that one. But shame. I'd like to have got the euro yen trade off, But I don't trade just for the sake of it. I think the euro yen is going up, but I'm not going to trade it just for the sake of it. I'll trade it when my rules come into line. Aussie dollar, 5-minute pin. Nope. Sometimes happens this way. You just get counter trends all the time. Bearish pin, uptrend. Yep. So we're not taking that one. Right, let's have a look here. So I'm just having a quick look at the chat to make sure I'm not missing anything here. Make sure I'm not missing any spammers either. People seem to think you come online, they can just spam you with their nonsense sometimes. Dollar CAD, 5-minute pin. Oops, a daisy. Dollar CAD, 5-minute pin. Bullish candle, downtrend. It's a shame. I'd like to take a nice trade, but not going to be trading for the sake of it. Euro dollar, 5-minute pin. We know the euro dollar is edging up. We want a positive pin. Bearish pin. Maybe all these trends are coming to an end today on the lower time frame. I mean, look at that. Look at that one there. You only need a couple of these a day, and you've banked your money. Look at that perfect pin. That one there. You'd have had that one. You'd have made your day's money on that one. At no time would you have been selling this currency pair today. So even if you see a negative pen like that one there, you wouldn't have been trading it. And no long trade today in the euro dollar on the 5-minute chart since 10 o'clock this morning. Look at that one. Bullish engulfer. Takes that break higher. It's actually a bearish engulfer. Scratch that one. That's a bearish engulfer. I get confused sometimes with these white candles. So you wouldn't have taken that. So scratch that. I want the bullish engulfers. That one there is nice. Bullish pin. You got a bullish engulfer in there. That one would have been nice. That would have given you all those moves. But we're not taking these bearish ones. Yeah, only taking the ones with the trend. And keeps you out of the trades as well. So let's get rid of that one. Just done that one, haven't we? Right. Oh, we just had another one thrown up now as I was talking. My speakers are not plugged in, so I didn't hear it. But we've got a dollar Swiss 5-minute pin. Dollar Swiss 5-minute pin. What's that going to show? I haven't been watching that too much today. Nice trend to the downside. Oh, bullish pin. We want to pull back into this array of moving averages with the direction of the trend, the higher time frame trend. Yep. But there's nothing wrong, folks, with not taking a trade. You don't have to take a trade just because you want to be in a trade. Euro dollar 5-minute pin again. That's not going to be anything. So you've got two back-to-back pins here on the 5-minute chart, by the way. Yeah, both of them. I mean, there's a story building here for reversal in this. Yeah, if you come up to resistance, big level, coming up to the 118 figure, pulls back, pin bar. I don't trade this on a 5-minute chart, but there's a case building here for this is going to reverse. Not my strategy today, folks, but you get the idea. By the way, one thing I want to mention here quickly is if you are trading and you're not using a risk management tool, well, you should be. Otherwise, you are gambling, and a risk management tool will ensure that you keep out of trouble. I can guarantee you, if you're using this risk management tool that I've got here, I can guarantee, and you're using it properly, and you're following me, I guarantee you won't be blowing up trading accounts. I don't know how many of you have blown up trading accounts in the past, but you're not using one of these if you have blown up a trading account. I'm here only risking on this default, it's 0.5% risk. Turning on my risk management tool, yeah, it just does all the work for me in terms of position size calculation. If I want to buy this currency pair, I've got my red line there, is my stop, and my profit target is the green line. Yeah, it's going to work out here. Oops, daisy, excuse me. It's going to work out here the risk reward, about 2 to 1. It's going to work out the lot size based on this size account. That's my maximum loss in dollars. I'm never going to risk more than that. I can also have double take profit targets as well, should I wish. So I can exit in 2 parts. It's going to enter in 2 parts to exit in 2 parts. Got to use a risk management tool. I don't know if my admin team are listening in, but we have got a free risk management tool as well, which you can lot size calculator, which you can have for free. Maybe we can post the link in here. It's basically what is that one? Yeah, it's basically a lot size calculator. It does all this for you. So maybe we'll share that link in a minute with you. It's free, but if you want to come over to them, you can have this as well. Again, I don't sell it; it's all free to our members. But I encourage you to have one if you don't trade that way. Honestly, you can gamble your way. I mean, who in the room had 7-2 Liverpool Aston Villa yesterday? Hands up. No one. That's gambling, but it's fun. That my daughter said to me, "What would you have got on that?" I said about 10,000 to 1. Put a pound on that, you made 10,000. Not bad bet for a pound. You're not going to do it there, of course. They haven't done it since 1953. But that's gambling. Bit of fun. If you're trading the Forex market, shouldn't really be fun, should it? It should be taking it seriously. And you've got to have a risk brain on you. Not brain, but you've got to be thinking about risk if you're trading. If you want to be in this game for any long periods of time. Let's have a look at this New Zealand. No, it's a long time ago now, so that we would have missed that. It's 45 minutes ago. So what I'm going to do now, I'm just going to wait for this next candle. It's got about 45 seconds to go. Liverpool lost. Yeah, I saw that.
Latest update here from Sarah Cook. She's the White House producer for CBS. She says the press pool has now arrived at Walter Reed. Says as of now there are no further scheduled updates.
Right, sorry about that. Just listening to that. Right, we've got about 20 seconds before the next candle. We'll have a look at this one. And if there's no signals, then I'll leave you. But you've got the rules anyway, so you can go off and carry on trading this. Just a bit more work for you, I guess, if you're not trading with a tool that's going to do the work for you. But you can still go and trade it. A couple of ATR pullbacks into the UA. Bullish price action pattern. Let's have a look. What we got here? We got a Euro Yen 5-minute pin again. Oh, that just looks as though. Oh, here we go. So, Euro Yen 5-minute pin.
The Fed Evans says the Fed must be in it to win it to reach an average 2% inflation.
I'm going to go to the high time frame chart. Look at that. I want to make sure that moving averages are nicely fanned out. They are fanned out. I'll have a go at this trade on this account. So I am going to put my risk management tool on. I am only going to risk 0.25% on this account because it is a live account and it's a live stream. So I'm going to turn that on now. I am going to place my entry. My stop is going to be back down there at 124.20. Okay. My profit target, well, I'm going to have a pending order, which is just a break above that candle. So it's going to be a break above. And profit target is going to risk reward of 1.2 to 1. And we will take that trade. Okay, so we got there. We've got a break above the break of that candle. So 124.55. If it breaks here in the next couple of candles, we'll go long. The risk reward ratio is about 1.25 to 1. Trend is up. We like the Euro Yen. We like this trade. Let's see if we get this one away. What do I think about the New Zealand Swiss? Oh, lots of things on that, Dan. Talk to me in the trading room later about that. I'm not going around all the different currency pairs, analysing them at the moment. We're just doing this scalping session for now. But if you're in the trading room, which I think you are a member in the room, speak to me tonight. I'll be on live again in about an hour's time for the London wrap. So come and join me there and ask me then. Stefan Van Wyk, Man United. Way. Yeah, they got sorted as well, didn't they? Right, okay. I'm going to wait another 3 minutes. See what's going on. Need the ATR info brand. Okay, well, I think I've got a video out there on YouTube on ATR as well, to be honest. I think I've got a video out there on ATR, but I'm not going to go through it all again now, James, for obvious reasons. But you can come over to the trading room and talk to me in there. I'm here to hold your hand. Any questions you may have.
News from Germany.
So what I've done here, just so you know, and then I'm going to jump off. I've got a pending buy limit order at 24.55. I'll leave it in for another couple of candles. My stop is below the 60 moving average. My risk reward is better than 1 to 1. It's about 1.2 to 1. And we will see how that goes. Just for this quick short stream. I'm only risking 0.25% on this account for this trade. Okay, Ben, come and yeah, I'll come over to the room and talk to me in the room if you wish. Right, we've got 2 minutes to go. I don't know the significance of the press corps moving into the Walter Reed Hospital. Does that mean there's going to be another press conference, or does it mean he's going to be bunkering down there now for the week? I guess the stock market's coming under a bit of pressure, is it? Not really. Right, folks. Well, hopefully you found today's little event useful. Don't forget to subscribe to the channel if you don't already do so. Don't forget to follow us on Telegram, Twitter, Facebook, Instagram. Anything else? Yeah. Leave a comment. Any comments. I like to see the comments. Even one about me in a pink shirt. Being fat and little. Comments are fine. Right. Looks as though we've got about a minute to go. Wait for the next minute. Have a look at that. See if we get into this trade. All good. Thanks. No problem. James. Good to see you. Gold trading. Gold, yeah. Gold's following, Gold's following the stocks up at the moment. Gold's come into some support zone. Quite like the gold higher. Obviously, dollar's coming under pressure. And as dollar comes under pressure, gold is going to push up. So gold does push on higher. We'll see. There you go. Thanks. A lot to learn, but very interesting. Simon Nadler. Yeah, well, we start at all levels. I'm just putting together, actually, just putting together a whole new education program in the trade in our room, designed for the very, very basic newbie traders. I think we're up to about, we've got quite a few videos in there at the moment, a couple of hours of videos, not all in one go, of course, but little videos. So join in there. Let's have a quick look to see if we had anything there. No, nothing. No new setups there. Right, folks, I'm going to leave that there. You may be in the trade. I'm going to leave this trade in. I haven't traded for 5 minutes for a while, so I'm happy to leave this in here. I like the trade anyway, the direction, the bias, so I'll be doing that. And we'll see how we get on. About a 1.2 to 1 risk-reward ratio on that. Learned a lot in this live. Great. Thanks, Orleans at Lindsay. Pleased you did. I'll see you next week if you're not going to be inclined to come over to the trading group. I say we do this 5 times a day. Gosh. But yeah, if you want to come over to the room, come do so. If you don't, then I will see you next week, same time, same place. In the meantime, have a good week. Keep an eye on Trump and watch that pound. See you guys. Have a good week.